Today, JPMorgan Chase and Coinbase join forces to expand crypto access to Chase customers. Senator Cynthia Lummis introduces a bill backing a plan by federal housing lenders to use crypto in mortgage underwriting. And Ethereum turns 10 years old today. Despite some recent setbacks, we explore why the network's future could be brighter than ever. Welcome to CNBC's Crypto World. I'm Brandon Gomez. Major cryptocurrencies climbing this morning along with the broader market thanks to stronger earnings and better than expected GDP data. As of noon, Bitcoin rose 0.5% to just under $118,000. Ether climbed about 1%. Solana's Sol token, however, dropped about 1%. Those numbers were, of course, before the Fed announced its decision to leave rates unchanged once again. You can check out CNBC.com for the latest on how crypto prices are reacting. And one quick update on crypto ETFs. Yesterday, the SEC approved in-kind creation and redemption for all spot Bitcoin and Ether ETFs. The move would boost efficiency for institutional investors and marks one of the first major crypto-friendly policy shifts under new SEC Chair Paul Atkins. In a statement, Atkins said that investors will benefit from the approvals as they will make the products less costly and more efficient. Okay, let's talk about the top stories. JPMorgan Chase and Coinbase announcing a strategic partnership to expand crypto access to Chase customers. Starting next year, Chase customers will be able to link their bank accounts to Coinbase wallets. They can also transfer their Chase Ultimate Rewards points to their Coinbase account, with 100 points equaling $1. Now, this marks the first time a major credit card rewards program will be used to fund a crypto wallet. Also, starting this fall, Chase customers will have the ability to fund their Coinbase accounts using Chase credit cards. JPM's head of payments and lending innovation said in a statement that the deal with Coinbase would enhance the security and privacy of customer data and would allow them to use their money and rewards in new and exciting ways. Next, a little-known Canadian vape company's stock soared yesterday after it said it was joining the crypto treasury game, but this time with Binance Coin. CEA Industries, which trades on the NASDAQ under the ticker VAPE, surged more than 800% after the plan was announced. Today, CEA is down more than 1% as of around noon. The company, along with investment firm 10X Capital and YZI Labs, said it would offer a $500 million private placement to raise proceeds to buy Binance Coin for its corporate treasury. According to CoinGecko, BNB is the fourth largest cryptocurrency by market cap, excluding the dollar-pegged stablecoin Tether. More and more companies have adopted the MicroStrategy playbook of using debt financing and equity sales to buy crypto and hold it on their balance sheets. That's thanks to the more crypto-friendly regulatory environment this year. Last, Senator Cynthia Lummis introduced another crypto bill yesterday, this time backing a plan by federal housing lenders to use digital assets in mortgage underwriting. The bill, dubbed the 21st Century Mortgage Act, would require government-sponsored enterprises to consider crypto when assessing single-family mortgage eligibility. Last month, U.S. Director of Federal Housing Finance Agency William Pulte said in a post on X that the agency will study the usage of cryptocurrency holdings for those looking to qualify for mortgages. The legislation would direct Fannie Mae and Freddie Mac to include digital assets recorded on a cryptographically secured distributed ledger as part of their mortgage risk assessments for single-family home loans. The bill would prohibit forcing the conversion of these assets into dollars. In a statement, Senator Lummis said that the legislation embraces an innovative path to wealth building, keeping in mind the growing numbers of young Americans who own digital assets. Senate Democrats have raised concerns over the idea that crypto could play a role in mortgage lending. 5 members of the upper chamber sent a letter to Director Pulte, warning him of the volatility risks for crypto and requesting more information on the agency's underwriting directive. All right, turning to Ethereum for our main story, July 30th marks the 10th anniversary of the network. In the past decade, has been filled with volatile highs, like the NFT craze during the 2021 boom, and lows, like the 2023 crypto winter. Crypto World's Tanea McKeel takes a look back at Ethereum's growth since 2015 and what the next 10 years could have in store.
If you know crypto, you know Ethereum is everywhere. It's the second largest blockchain in the world by market cap to the tune of $440 billion, and for good reason. NFTs, meme coins, apps, and games all can be found running on the network.
What Ethereum represents and what Web3 represents is the re-decentralization of the World Wide Web. We're confident that Web3 is going to come to dominate over the next few years.
Ethereum has cemented its position in the cryptocurrency and Web3 space over the last decade, weathering both the frothy highs of NFT mania and the brutal lows of the post-FTX crypto winter. But even as the network marks 10 years at the end of July and global corporate giants look readier than ever to go all in on blockchain, thanks to a regulatory overhaul, Ethereum is facing an identity crisis. So is the network ready for the next decade of development? Ethereum was first conceptualized in 2013 by computer programmer Vitalik Buterin. He was an early believer in the original cryptocurrency, Bitcoin, but Vitalik envisioned Ethereum as a platform for blockchain applications, something Bitcoin's slower proof-of-work network wasn't designed to handle.
Vitalik's initial vision was that it should be easier to launch blockchain ecosystems. Back then, if you wanted to try out a new idea, you had to perhaps take the Bitcoin code base and tweak it in different ways to establish new features, and then attract lots of people to your community to build and to mine your token. Vitalik figured that if we could attach a programmable virtual machine to blockchain technology, then if you wanted to create a new coin or a new application, you could just program that and make it resident, deploy it to an existing blockchain system, the Ethereum system.
Buterin, alongside a team of developers, officially launched Ethereum on July 30th of 2015. The price of ETH really took off during the 2021 bull market, a rally characterized by the rise of DeFi and NFTs that used Ethereum's network to operate. Developers kept quickly evolving and updating Ethereum, making it faster and easier for applications to grow, culminating in the merge. That's when Ethereum transitioned to proof of stake in September of 2022. Then the 2022 crypto collapse shook investors and developers alike. Developers have continued to build, but price struggled to fully come back since the 2022 crash and hasn't revisited those highs.
Decentralized finance has had different waves of activity. It's undergoing new waves of activity. It enabled the crossing of the chasm into mainstream culture in the form of the NFT phenomenon. We're actually seeing a significant resurgence recently of NFTs, which is amusing and nice to see. Essentially, we established a new trust foundation for the planet, a decentralized trust foundation for the planet in the form of Ethereum and some other decentralized protocols. Currently, there's only two really decentralized protocols, Ethereum and Bitcoin. On top of that new trust foundation, we've built a global decentralized financial infrastructure layer.
Bitcoin's success in the same period has helped, as well as the launch of Ether ETFs. Despite them being marked by comparatively weak demand versus Bitcoin funds, they've amassed about $9 billion in net inflows since listing versus Bitcoin ETF's $36 billion in their first year of trading. Ethereum also faces stiffer competition from other blockchains like Solana. That network's market cap has grown 20% since July of 2024. It also handles more transactions per block than Ethereum. Geopolitical uncertainty has weighed on ETH in 2025.
ETH today is roughly where Bitcoin was in January 2019. That's when Bitcoin turned 10. To me, it's not a surprise that after 10 years of uptime and sort of being around, that's just how long it takes for people to get their heads around this stuff. And so I suspect the next 4 to 5 years is where ETH kind of has its institutional arc the same way that Bitcoin did between 2019 and 2024.
But all hope might not be lost. In 2025, Ethereum is experiencing a demand shock as appetite for the network looks poised to grow and grow. Ether has become more attractive to institutions in recent weeks, largely due to legislation around stablecoins, most of which are issued using the Ethereum network, being signed into the first ever U.S. crypto law. There's also the successful June IPO of Circle, the issuer of the second largest stablecoin, new leadership at the Ethereum Foundation, and most recently, a boom in Ether treasury firms and corporate entrants.
ETH is sort of in this like awkward teenager phase right now, where it sort of is, it's found its identity, but it needs to sort of get comfortable in its own skin. The realization is, like stablecoins are a killer use case, DeFi is a killer use case, Wall Street wants to come in and build in the L2s. And so now I think it's about really embracing that and leading into that and making it real.
When it comes to decentralization, a growing priority on Wall Street, Ethereum is still king.
If you are a managing hundreds of billions of dollars, trillions of dollars of assets, what you care about most is ensuring that you actually really do have a neutral platform that people can operate on. And Solana has done a fantastic job further decentralizing the network, but still does not compare to the decentralization that Ethereum has achieved. So even though, it might be a bit slower than Solana, it's still, I think what we're seeing right now is institutions are beginning to look at it and be like, if we are going to have to, manage hundreds of billions of dollars on a platform, Ethereum is probably going to be the one that we're going to choose.
Okay, that's all for Crypto World today. We're back again tomorrow, and we'll see you then.